So for the purpose of today's meeting, Eddie, you want to touch on what I want to do for the viewer out there and for those that are interested in entering the market right now or just want to know what's going on. You're hearing a lot of information, you're hearing the news, you may be talking to your friend or family member that's in real estate and you're just trying to understand it, especially if you're trying to make a real estate decision. My questions for you, the first one is, what should someone thinking of buying a home be doing to prepare for the approval process?
That's a great question. And oddly enough, one that you'd be surprised I don't get so often. There's three key things to qualifying for a mortgage, and it's basically your income, your credit, and your assets, right? So if you have decided that you want to own a home, first and foremost, what I recommend always doing is applying with a mortgage broker like myself to find out exactly where you stand. And that'll give you a clearer roadmap, right? Now, if you already know that there are some issues that need to be worked on, I would focus on those three things that I previously mentioned: income, credit, assets. Make sure that you have got your income documentation in line, and if you're not sure of what is needed to document your particular income, and what I mean by that is if you're self-employed, you would need one set of documents, whereas if you're a W-2 employee, you need another set of documents. Right. So first thing is understanding what's needed and making sure you have the proper documentation, and then seeing where your credit is, how that lines up with your income, your debt to income ratio, and then your assets, making sure that you are putting money to the side, because although, and I'm sure we're going to touch on this in a moment, but although there are down payment assistance programs and things available, there are some upfront expenses that you need to be prepared for. So you want to make sure that you have at least, I would say, 2 to 3% of your desired purchase price set aside available in liquid assets. So income, credit, assets are the first three things, or major three things, that I would focus on if you're getting ready to purchase a home. And probably tantamount to all of that, or most important, is that you reach out to a mortgage professional to find out exactly where you stand, because a mistake that I see people make so often is that they think there's one or two things that need to be worked on. They dedicate a lot of time and energy and sometimes money into fixing those one or two things, only to find out that there was 3 or 4 other things that could have been worked on simultaneously that now they need to go back and fix, right? So had those people had a quick 10-15 minute discussion with someone like myself, a mortgage professional, those things can be identified, and then everything can be focused and worked on over that time frame, and no time goes wasted.
Right, and that's some of the things that you've helped me understand that I've added to my buyer's consultation as a preliminary discovery of what's going on with the potential borrower, is to figure out, all right, if you're about to do this, before we get to the lender, right, before we do this, let's have a couple of questions that we can answer. How much do you have in liquid assets, right? Where do you have money for your new home? Is it going to be coming out of a retirement fund, your savings account? Is it going to be a gifted funds? Like, where is that coming to purchase your property, right? And then, like you said, there are a few things prior to you even getting to the closing table, right? There's an inspection that you got to pay for, or inspections, depending on the level that you want to do your due diligence.
Right, whether you're doing a new build or an established home, and that's another popular misconception. Sometimes people think I'm buying a brand newly built home, new construction, so they're going to handle all the inspections. I don't need to worry about an inspection. Nothing can be further from the truth. I mean,
it's still man-made.
Yeah, and it's one of the biggest investments you're going to make in your lifetime. So you want to make sure that you have your own representation and that you're getting your inspections done, because the last thing you want to do is find out 10 years down the road that you bought a product that wasn't built correctly.
Right, and this is not to scare anybody. This is just so that you can be a sound buyer. There are 5 pillars of when you're buying a home that you need to check. That is your HVAC, that is your foundation, that is your plumbing, your roofing, and I'm missing one. Plumbing, HVAC, roof, foundation,
electrical.
And electrical. Yeah. Okay, those are major components that can be, if not addressed very expensive things to repair. So it's always good to have a person that you know that has those people on hand. So if you want to run somebody through there, maybe you received an inspection report and a couple of things were flagged and you want to be able to look at that. That's as another expense if you want to do a proper due diligence prior to you getting to the closing table. Then you got earnest money, which is typically 1% of whatever your sales price is. For example, if you're buying a house that's $300,000 and that's $3,000 that you will put down, given to the escrow officer or title company that's going to handle the transaction. And that is pretty much your good faith saying, I'm earnestly giving you this money to purchase your house in the future, which is then applied to your down payment at the time of closing.
Right.
Then there's appraisal, and there's other things depending on how well you want to do your due diligence prior to actually getting to the closing table. And last but not least, a popular thing that happens most of the transaction is the option period.
Right.
And that's actually paying the seller to tell you, or to tell them, hey, I want to buy your house. Here's the earnest money, and I'm going to pay you for the time that you allow me to do my inspections and my due diligence. And that's anywhere between a few days to, I've seen as high as 10 days that people do that, and you pay that. Now, if you opt not to buy the house, then that goes to the seller. You get your earnest money back. But I think you touched well on what I should be doing as a potential home buyer prior to getting into the process of actually speaking to somebody like you. Yeah. What do I have to buy the house? What assets do I have? Where are the cash funds going to be at? Where's my FICO score at today? And my employment, which is another thing, and we'll touch on that here in a second. What am I doing? Am I an entrepreneur? Am I a W-2 employee? Which leads to the next question, Eddie, which is, are there products for a person that doesn't have a normal 9-to-5 job where they receive W-2 income? What's the difference between W-2 income and somebody that's an entrepreneur and they're trying to qualify for a loan?
Another great question. So the short answer is yes. We have a number of products to meet most people's needs, whether you be a W-2 wage earner or self-employed. And to answer your question, generally speaking, for self-employed individuals, and I'll try to do my best to put these in order of cost efficiency.
Yeah.
Right. So there are your QM products, or what stands for as a qualified mortgage product. Yeah. And then you have what we call your non-QM products. So just to kind of put that into perspective, a qualified mortgage is generally going to be something that is fully documented. So with the W-2 wage earner, we would have your last 2 most recent years W-2s, your 2 most recent paycheck stubs. We would document your assets, etc. For a self-employed individual, that would typically be 2 most recent years of your tax returns, all pages, both personal and corporate if you file a separate corporate return. And then usually your 2 to 3 most recent bank statements showing current business activity. And then most lenders would require a letter from either a tax preparer or a CPA, something showing, documenting the legitimacy and activity of that business. Now, that is QM, qualified mortgage. That's typically going to get you your lowest down payment options and your best or most competitive mortgage pricing, whether it be interest rate, closing costs, etc. Your non-QM basically opens up a door to what I like to say alternative doc, or many conveniences, right? So instead of maybe needing your full 2 years tax returns, there are lenders with programs that might have a requirement of just a letter from a CPA or your tax preparer saying this person has an active business, right? Or a P&L loan, a profit and loss statement, would document the income portion of qualifying. So there are many non-QM products, but with that convenience often comes a cost, whether it be a higher down payment or a higher interest rate, right? And I just wanted to add something to what we were previously talking about, and I think this kind of caters to everything. Some of you out there might be hearing all of these things, and if you're anything like me, you've got the calculator going off in your head, you know,
right.
Oh, I've got to pay for this inspection,
right.
I've got to pay for this earnest money and the option that Cory's talking about. Maybe it is better for me to rent, you know, that sounds like a lot. It only further illustrates the importance of working with a team that is going to have your best interests at heart, right? Because we're going to go over these things with you and make our recommendations. Obviously, at the end of the day, it's your decision, but Cory and I will do our best to show you, okay, here's what we recommend. Here are the inspections that I would personally get. As a lender, from a lending standpoint, inspections are not required, but I always recommend them because obviously you're making a huge investment. And I think in many cases these days, if you have someone that is representing you that's just chasing after that dollar, they might
allow you to not do that.
They might actually recommend, oh, well, don't worry about the inspection. It's a new build. And that kind of shows you what type of professional you're working with.
That's negligence.
Yeah, and the scary part about it is many of these people don't even realize the harm that they might be causing. So it's not even intentional, which in my eyes is almost worse. You know,
what I would say to that point right there, I'm sorry to cut you off. What I would say is, if that person is telling you that, now I understand an affordability situation where maybe you can't afford to pay for an inspection because you're paying for everything else, plus life is still going on. I get that. But what I would say, and why I say it is negligence, is one, you have to ask that real estate professionals helping you out, you know, how do you know this is something that I can overlook? Have you gone through the proper channels to talk to whomever you know? Like, why are we trusting the builder so much that we're not getting an inspection? Because yes, it's a new house. I'm not sure, I'm not savvy on building a house. I can see that everything looks nice, but if anybody that has been in real estate for some time, you know, once the walls are up, you can't tell what's going on in there. So you don't know if something is off. You don't even know if to identify something that is in your yard or underneath the cabinets, which you don't know how to identify if there is a potential issue. And hiring an inspector, which typically is a general inspection, it'll at least give you some kind of clarity or idea or insight as to, hey, you might want to look here because what they did here, they may have done things up to code, but it may not be up to what you're doing and to your standard, and you just want to address it. And so when you have somebody that say, oh, it's okay, then once the deal is done, they're not going to be the one staying in the house. You are, and any potential problem that arises, you're going to have to take care of it. And new construction is no different than a resale home. It's just newer. It's just newer, and it has less complications, hopefully, but it all is still man-made, and it all still needs to be inspected to make sure that what somebody built is correct and it's supposed to work efficiently how it's intended to work.
Yeah, and I think you and I personally have seen this on a few transactions where everything's great, everybody's smiling and happy until something goes wrong, and then those relationships will quickly sour. So I can definitely speak for, I think, Cory and myself when I say that in our network of people that we work with, you know, going from electricians to inspectors to insurance people, we do our best to make sure these people are vetted and experienced. We have personal experience with these people, so we can trust, you know, the work that they're doing, and that they're going to give us the best recommendations possible to keep as much money in your pocket as possible. So we're going to let you know, here are our concerns, and then give you the most information available to hopefully make a decision that you're going to be happy with, not only today, but for years to come.
That's the goal.
And I think that's the huge difference between working with somebody that represents you versus somebody that represents the opposition, right?
Gotcha.
And I think so often people overlook that, especially when dealing with new construction or new builds, because everything's so exciting, right? You're getting into that newly built home. You've got this
that new carpet smell.
Yeah, you've got your fancy builder's representative that's smiling and giving you champagne and all that, and everything's great. But people don't step back to say, wait a second, everybody that's working with me works for the builder. So if the builder does something wrong, who's going to tell you?
That part.
So that's important. And I'm not the handiest guy. I try to save as much money as possible. Something I've definitely learned in my short years on this earth is that old cliche, measure twice, cut once, and utilize the expertise that you have access to. So if I have somebody that's an expert at real estate or mortgages, if I have an expert electrician, I'm certainly not gonna try to wire my home on my own. I'm gonna get the expert advice.
Or at least point and say, hey, are those wires going the correct way?
Right. Is that on?
All of that information. That's good, Eddie. And we're gonna wrap up here. I had two more things I wanted to cover real quick, and then we're gonna get out your hair. Right now in the industry, as we all know it, the industry has taken a shift in terms of interest rates. A couple years ago, there was no inventory to be found. Housing prices, not only here in Houston, but everywhere in America, were just skyrocketing. And interest rates, I say, the cost of the cash was cheap.
Right.
The cost of the cash was cheap. What it cost you 2 years ago to buy a house is vastly different today. But now they're in recent news is on a decline, and with that comes new loan products or different strategies for these builders, just for the economy as far as real estate in general, trying to get traffic and movement. Everything people are hearing, what's going on. We cannot predict interest rates. We cannot. Now there's an assumption, and we're going to wait for rates to be cut, but real estate transactions on a daily basis happen everywhere. So people are still buying in the market, even though you're hearing the housing market is in shambles or there's so much inventory. And I even say there's a lot of inventory. That's just giving you information, but that's not to say that you can't buy. But now, as we are sitting here shooting this video, interest rates have dropped. And there is a lot of inventory, which in turn gives more than likely the buyer an advantage, right? Because when you have supply and demand as we have it today, those builders, people that are trying to sell for whatever reason they're trying to sell, they still want to sell their property, right? They still want to get out of it. So in the lending world, there are some different things that I wanted to touch on right here, which was, if you could touch on when people are hearing this 100% financing product, what are the details of that? And then backdoor, and people are hearing about, well, I can get somebody told me about a 2-to-1 buy down or a 3-to-1 buy down. If you could just touch on those real quick, starting with the 100% financing.
Yeah, absolutely. So 100% financing is exactly what it sounds like. You have options, whether it be through conventional financing, VA or FHA, or USDA even, to get 100% financing, which means zero down payment. Now, each loan scenario is unique, right? So different strokes for different folks, as I like to say. It's important that we go over and compare your options, because as you kind of touched on earlier, there's no such thing as a free lunch. There's no such thing as free money per se. So everything comes with its pros and cons. 0% obviously can leave you with more cash on hand and having to bring less cash to close or to the closing table. But it could also possibly have you with a little bit higher of an interest rate, right? Whereas putting down more money might be able to get you more preferential pricing, but cost you a little bit more upfront. So it's always important to weigh those options and make the decision that's going to be best for you and your family.
Right.
A 2-1 buy down is basically what we refer to as a temporary interest rate buy down. Usually the first number in the 2-1 or 3-1 buy down represents how many years that interest rate will be reduced.
So that's the term.
Right. Okay. So a 2-1 buy down will start with your interest rate being 2 percentage points lower your first year, and then your second year would go up 1 percentage in that interest rate, and then would land in the third year at your fixed rate.
So what you're saying is, if ultimately I'm supposed to end up with a 5 1/4,
right?
Then in a 2-to-1 buy down, my first year it would be 3 1/4.
Correct.
And my second year it would increase to 4 1/4, and then on my third year I'd be at 5 1/4.
At your fixed rate of
at my fixed rate.
5.25%. Correct.
So I get a little bit of a little bit of a build up to that higher payment. I got you.
Right. Now, they have your 2 and 3/1 buy downs, which can be great, but some people, depending on the time frame you plan on being in that home or what your plans are, some people will skip the step of comparing what maybe a permanent buy down might look like. Right? So instead of me getting this temporary buy down, let me look at the permanent and see the cost difference and how that might impact me. You might end up going with that 2 or 3/1 buy down, but you also might say, hey, wait a second, this permanent looks like it might make more financial sense to me, right? And that's why it's important to deal with the right team that's going to take the time to walk you through those comparisons. But yeah, those options can be great for the right situation. And in many cases, you negotiate the terms of those upfront, right? So you can actually have the seller pay the bulk, if not all of the cost, to fund those buy downs.
Let me right now is a great time for a buyer to be able to negotiate those. And seller concessions is contingent on the loan product that you are receiving. So with an FHA, it's probably the highest you can get, up to 6% of whatever the loan amount is.
Right.
With a conventional is 4%.
Right.
And with a VA is 3%.
Yes, and those actually I'm flip that. So the conventional is 4%. Conventional is 3%, a maximum seller concessions, and then the VA is 4%.
Okay,
and then those amounts can also vary depending on the amount of down payment. So you can actually get those amounts increased the more money that you put down.
That's good.
So Cory, you just made a great point about now being a great time. So I think a lot of people make the mistake of saying, oh, I'm gonna time the market, I'm gonna wait. I've seen on the news that the Fed's gonna be meeting again in September and interest rates are probably gonna drop, and that might be true, but guess what else comes with that? That
price increases.
Exactly. So if interest rates were to drop by just 1 percentage point, which may not sound like a lot to some people, but it's huge, that could literally flood the market with buyers and put you in a situation where everything we just got finished talking about, negotiating of those seller concessions, goes out the window, because now the sellers have a line of people waiting out the door to purchase their home. So why would they give you something that they don't have to give you, right? I've got a line of people waiting to buy my house who don't want anything. They're not asking for anything. They just want to buy it for the price that I've asked for. As a matter of fact, in those markets that are flooded with buyers, we run into situations where, I'm sure you remember just a couple of years ago, people offering 10, 15, 20,000 above the asking price.
Yeah, some of those people paying for that.
So that's something to think about. There's that old cliche, marry the home and date the rate. And what does that mean, Cory?
Now that's new to me.
Oh, okay.
Marry the home and date. Don't marry the home in the process. Like the home. That's Eddie is a little older than me, so he may say some things that I'm not privy to. But what I would say, I like to tell people, nothing's done in a transaction until you sign on the dotted line first at the title company, both parties, to make it an executed document saying both of you have agreed, and that is not the end. And Eddie can tell you this, that's not the end. The end is once you receive the email saying it has been funded.
Yes, and you get those keys.
And you get the keys, because something can come up last minute. So just know that. That's why I say, like the home, think about what you're going to do in the home. That's a part of the process. I want you to have a good time. But be on the side of, hey, it's not mine yet, so don't fall in love with it until you got the keys.
Right.
And then once you got the keys, we celebrate. You know what I'm saying? We celebrate. We take pictures in front of the house. We dance. You got your keys. Let's start the next chapter of what we're going to be doing in our living experience. So that's what I would say to that. But I do understand what you said. What was the deal you said again?
Marry the home and date the rate. The idea behind that is, look, to simplify everything, because you're going to have media outlets and everybody with this fear mongering of not buying a home because interest rates are too high, etc. If you really want a great answer to that question, ask somebody that purchased a home 20 years ago how much they paid for their home and what their interest rate was. I think you might be surprised by what you hear.
Maybe a little upset.
Yeah, I've got loved ones that live in the tri-state area. you know, right around Long Island, New York. And real estate is costly in the tri-state area. I've got actual close loved ones that purchased their homes for $20,000 at interest rates of darn near 17%. But guess what that real estate is worth now? You know, I'm talking about multi-millions, $2-3 million just for the land. They want to purchase the home and knock it down and build a parking lot. So I think the one truth that most people will agree on when it comes to real estate is that over time, real estate's going to appreciate in value. Interest rates are going to have their ebbs and flows. They're going to go up and down like a roller coaster. But over time, regardless of what happens to interest rates, the price of real estate is typically going up. So when I say marry the home and date the rate, I mean lock in that price for the real estate now, because I promise you, unless you're buying a money pit, 10, 20 years from now, you're gonna see a huge increase in equity. And you might not even be thinking about what interest rates you paid because the value is up. But if you wait for that right rate, you might be pricing yourself out of the market because that price has continuously gone up while you're waiting for an interest rate that may never come.
Yeah, and that's our job as the lender and the real estate agent or brokerage that you're working with, to convey that in the simplest terms as possible.
Yeah.
Which is why you hire us, right? So you can be informed about what's going on. But today, man, it's been a great time talking with Eddie about all of this going on, what it takes to buy a house, which is why the beginning of this is, what do I need to even get approved? How do I get this process started? It's a question that I receive often, and it's something that needs to be addressed and answered. And so what this is to educate you on how do you get there, and then how do you get to the next level, then how do you get to the next level, and then you start getting to the point where you bought a home, you buy your second, your third home, maybe you're investing in stuff, in homes, and you need to know how to do it. So you want to hire the right people, and we just want to educate you on the process and what it is that we can do for you. So Eddie, if you can, before we get out of here, can you tell people where we can find you, what's your socials, what's your information, and we'll have it listed below here in the caption as well for you. Yeah,
absolutely. You can find me through a quick Google search, Edward Foy Mortgage, or you could always just search H Mortgage on most social networks. We're going to post our links below. And yeah, if you have any questions, all things real estate related, we are just as far away as a quick comment, DM, or phone call. So I hope to talk with some of you real soon.
Yep. And you know me, I'm Cory Real Estate Guy, better known as Cory Grant, and I am with eXp Realty. My information will be down below. I am in the field almost daily, if not in the field, at home in front of a computer, making sure that I am prepared to help you out to buy, sell, and invest in real estate. It has been a great time, and we will see you next time. Peace.